You're scrolling through your feed and something catches your eye, a headline that sends a chill down your spine. The crypto world is buzzing again, but this time it's different. Whispers of XRP buybacks, corporate power plays, and a potential gold mine that could shake the market to its core. But then the shadows creep in, allegations of rug pulls, influencers caught in scandals, and fortunes lost in the blink of an eye. You can feel the tension, the stakes rising with every word. What's real? What's a trap? And more importantly, where do you fit in all of this? This isn't just another update. It's a high-stakes game where opportunity and risk collide. You're about to step into a world where one decision could change everything. Are you ready to find out what's really happening? You're sitting there, maybe with your morning coffee or just winding down after a long day, ready to dive into the world of crypto. You hear the buzz, a conversation sparking ideas, questions, and maybe even a little excitement. So here's the deal. You think to yourself, leaning in, this isn't just another crypto update. This is the double-edged sword of opportunity and risk all wrapped into one. You can feel it, the pulse of the market, the whispers of major institutions possibly buying back XRP. Yeah, that's right, XRP. It reminds you of something, doesn't it? Michael Saylor's MicroStrategy snapping up Bitcoin a while back. Back then, it was a game changer, a moment when people started to think maybe this isn't just some internet fad after all. Now imagine this, a big player like SBI Holdings stepping up to do the same thing with XRP. The ripple effect, pun intended, could completely change how the market sees it. You're already picturing the headlines, the shifting sentiment, the potential for something massive. But wait, there's more. A Swiss firm, GAM Investments, is actually pushing SBI Holdings to consider these buybacks. And here's the kicker. They're saying SBI's XRP holdings are worth more than SBI's entire market cap. Yeah, you heard that right. It's like they're sitting on a gold mine and somehow the market hasn't caught on yet. You pause for a moment, letting that sink in. Undervalued, that's the argument, and you can't help but wonder, is this the kind of opportunity people dream about? You take a deep breath, trying to piece it all together. To really get this, you remind yourself of the basics. Market cap is the total value of all the shares of a company, or in this case, all the XRP out there. A buyback, that changes everything. It reduces how much is available. And if demand stays the same, or better yet, goes up, what happens next? Price goes up, classic supply and demand. You nod to yourself. It's simple economics, but it's powerful. But then there's that nagging thought in the back of your mind. Hold on, you think, what about the SEC case against Ripple? Doesn't that throw a wrench into everything? And you're right. It's a huge factor. You can almost see the two scenarios playing out in your head. If Ripple wins, it's like a green light for the whole market. More people might start using XRP, and this whole buyback idea could pick up serious momentum. But if the SEC wins, well, that's a different story altogether. Things would get murky, uncertain, and risky. You imagine the possibilities: SBI Holdings initiating a buyback, Ripple winning the case, and XRP skyrocketing. It's tempting to dream about, isn't it? But even as you let yourself picture it, you know better. There are always risks. Even with buybacks, there's no guarantee the price will move the way people expect. Market sentiment, it's fickle, unpredictable. And then there's the bigger picture. Regulations could change. The economy could shift. And crypto, as promising as it is still young and volatile. You remind yourself, nothing in this space is ever a sure thing. You sit back for a moment, weighing it all. The potential is there, no doubt about it. But the risks, they're real too. You tell yourself the classic advice: always do your own research. Understand the downsides. Never invest more than you can afford to lose. It's a mantra you've heard 100 times, but today it feels more relevant than ever. And just as you're processing all of this, another story pops into your mind. One that feels like the complete opposite of the XRP situation. Be Libra. You've heard about it, right? A cautionary tale if there ever was one. The whole rug pull scenario where developers allegedly pumped up the price and then vanished, leaving investors with nothing. You can't help but feel a pang of frustration for the people who got caught up in it. And then there's Dave Portnoy, the Barstool Sports guy. Somehow he's mixed up in this mess, and it adds another layer to the story. You think about how he reportedly received 6 million Be Libra tokens just for promoting the project. 6 million. And here's the part that makes you stop and think. No one's really sure if he knew about the alleged rug pull beforehand, but it raises a big question, doesn't it? How much research are these influencers actually doing before promoting projects like this? It's a tricky situation. On one hand, you get it. These influencers have built their platforms, and it's fair for them to get paid for their work. But on the other hand, their reach is massive, especially with younger audiences who might not fully grasp how risky crypto can be. And then there's the transparency issue. Portnoy didn't even disclose that he was being paid to promote Be Libra, at least not at first. That lack of transparency, it's a problem. It erodes trust. It spreads misinformation, and it leaves people vulnerable. You shake your head thinking about how easily things can spiral in the crypto world. Portnoy claims he gave the tokens back, but by then the damage was already done. It's a reminder of just how important due diligence is, whether you're an investor or someone with a platform. You imagine the people who jumped into Be Libra maybe because they trusted the hype or the influencer behind it. It's easy to see how things like this happen. Crypto is exciting, it's new, it's fast moving, and it feels like the future. But that excitement, it can blind people to the risks. And when influencers don't disclose their financial ties, it only makes things worse. You think to yourself, people deserve honesty, especially when it comes to their money. The Be Libra story sticks with you because it's not just about one token or one influencer. It's a cautionary tale about the entire crypto space. It reminds you that while there's potential for massive gains, there's also the potential to lose everything. And that's the double-edged sword, isn't it? The same thing that makes crypto so thrilling is what makes it so dangerous. You sit with that thought for a moment. On one side, you got the XRP story, a potential gold mine if things go right. On the other, you've got Be Libra, a stark warning of what can happen when things go wrong. It's a lot to process, but one thing for sure. If you're going to navigate this space, you've got to stay sharp. Do your research, question everything, and most importantly, never let the hype cloud your judgment.